Welcome back to Beyond Four Walls, Conversations on Affordable Housing. I'm David Dworkin, President and CEO of the National Housing Conference, the nation's oldest and broadest affordable housing coalition. I'm joined today by Julia Gordon, HUD's Assistant Secretary for Housing and the FHA Commissioner. She's the nation's hands-on leader of both single and multifamily affordable housing policy, as well as the Chief Executive of the Federal Housing Administration. In that role, she oversees single-family, multifamily, and healthcare mortgage insurance programs, which currently serve more than 7.5 million homeowners, some 1.4 million renters, and approximately 4,000 healthcare facilities across the U.S. and its territories. She's also responsible for HUD's multifamily assisted housing portfolio, which serves more than 1.2 million low-income residents, the administration of HUD's housing counseling program, and the development and oversight of federal standards for the design and construction of manufactured homes. Throughout her career, Commissioner Gordon has been a strong advocate for affordable housing policies, as well as a hands-on practitioner in some of the most challenging markets in the country. She has an extensive record of working to achieve equal housing justice, fairness, and equity in housing and consumer protections. Prior to joining HUD, Commissioner Gordon was most recently the president of the National Community Stabilization Trust and has also held leadership roles at the Center for American Progress, the Federal Housing Finance Agency, and the Center for Responsible Lending. Welcome, Commissioner Gordon. I'm excited to talk with you today.
Thank you so much for having me.
I'm thrilled to have this time. I appreciate it. Let's jump right into it and talk about, I think, the issue that's on everybody's minds, the rent, which, as we often hear, is too damn high. I think that's true in some markets and for many, many people. What do we do about that? Because there's just a wide range of opinions on the next steps and a lot of disagreement.
Well, thank you for that question, which looms over anybody who works at any level of government anywhere in this country these days. You know, for a long time, it's been true. If you ask any mayor what their top three priorities are, housing will always be one of the top three. And frequently, they'll look at you and say, housing, housing, and housing. But for some reason, for many years, that urgency and need has not bubbled up to the federal policy space. And what we've seen with the Biden-Harris administration is a much more intensive focus on the cost of housing, the affordability of housing, the need to increase the supply of housing. And recently, we've heard the president himself talk about housing a great deal in speeches, whether it's homeownership or rental. And I think we'll continue to hear that. The administration across the board, both from the White House through, of course, HUD, which is the central housing agency, but as well as the Federal Housing Finance Agency, Treasury, VA, USDA, all the many government agencies that have a piece of housing, DOD, all of them have been focused and, to be honest, collaborating and working across agencies in a really useful way. We had to go through a pandemic where housing was not just an imperative for people's economic well-being and a place to live, but was a public health imperative to stop the spread of COVID-19. I think we all took a lesson from that of how important it is for people to have a home and a home that they can stay home in if somebody says that you need to stay home now. And both under the previous administration and this administration, there was a lot of focus on making sure people could stay home. I especially want to talk about HUD, since we're here to talk about HUD. The work that HUD did, both on the rental side and the homeownership side, to keep people in their homes was extremely successful and proved that the federal government can make a big difference in housing when it has the will and the energy to address the issue. And so the question to me is, how do we take the lessons of that period and use them for policy making in the future? I think one thing we know is it actually helps to have significant financial resources if what you're trying to do is provide housing affordability and accessibility. And we need more resources. HUD's budget has shrunk significantly over the past couple of decades, and that is showing itself up in the housing market.
And you're going to come back to that, I know, because the money is what pays for everything you do. And we don't invest enough in housing. I think it's even people who don't agree with the programs that the money is going into would have to say that there isn't enough investment going into housing, whether it's public or private money. Otherwise, we would have a lot more housing and lower housing prices. It's pretty basic math. But I want to come back to something you said about the Biden-Harris administration and the commitment to housing there, because it is unprecedented. I mean, one of the things that's unprecedented is the number of times we use the word unprecedented. But setting that aside, it is definitely an unprecedented focus of the White House and the president himself. And this goes back way before he became president, even before he became vice president. I've often heard him talk about the long walk his father made to explain to him that they were going to have to move out of their house because he lost his job. It's an incredibly emotional memory, has clearly had a deep impact on him. And frankly, as somebody who had to do that during a divorce, that is a moment you never forget, ever. So I totally understand how deep that impact was on him. And he's brought that. He's brought it. And even on his inaugural address, he actually ad-libbed that part and brought it into his inaugural address. I had to go back and look and see, when was the last time a president talked about affordable housing in their inaugural address? And I couldn't find one. I mean, I think it must go back to, Harry Truman, even in LBJ, in his affordable housing, in his inaugural addresses, talked about bigger themes, did a lot on housing, spent time talking about housing in his State of the Unions. But the last State of the Union, the president spent more time on housing than anybody since LBJ. And so it's an impressive commitment at the White House. I think for HUD, you must experience this. It's a game changer for you all in working with other agencies. You talked about all these other agencies you've been working with. That's also new. So what do you do with that political capital? Here you are, sitting in this job, in a position to actually spend that capital. How do you do that?
Well, you try to use the political capital to get actual capital.
We're always going to come back to the money, aren't we?
We're always going to come back to the money, because here's the thing. People like to come to us and say, well, how about if you tweak this program this way? How about if we created this new program that did this other thing? At HUD, throughout the building, not just in the Office of Housing, we have many, many proven incredible programs with track records of supporting affordable housing and community development and help for people who are unhoused. And the only problem we're having with these programs is we can't get enough resources for them. Here in the Office of Housing, we have project-based rental assisted housing. That's part of my brief here. And we have a great system for helping to provide housing for seniors, housing for persons with disabilities, housing for low-income families. But when it comes to budget time, it's hard to get enough money. We can barely keep up with inflation costs and keep what we have, let alone build more or reinvest into existing apartments so that they don't become run down, so that they continue to be the kind of safe and decent and affordable places we all want our families to live. And so what I will do every chance I have is to remind people that we know how to do this. We just need the commitment to the resources. I have no doubt that if that were entirely up to President Biden himself, we would have more resources. But of course, the budget process in this country involves quite a number of people, including Congress, and everything is expensive and trade-offs have to be made. And it's just too bad that we haven't been able to significantly increase the resources we spend. I mean, when you look at some other developed countries and places that are known for providing affordable housing, it will not be surprising to you that when you look at what they spend as a percentage of GDP, it's higher. It's not that high. I mean, it doesn't take an enormous amount to fill this gap, but it takes more than what we have right now. And what I'm hoping is that because the affordability of housing is now a problem that hits people way up the income spectrum, that is often what it takes to get the kind of federal policy attention on it that we need. You know, when you have half of all renters being cost burdened by their rent, you know, paying more than 30% of their income for rent, that is something that's going to get a lot more attention. That's a shocking number, frankly.
Yeah.
And on homeownership, pick up any newspaper on any given day, and you will hear people explaining, especially Gen Z folks and millennials, how they feel like they're never going to be able to afford a house.
And they may be right. I mean, you look at the last 5 years, the amount of income needed to afford the same house, the exact same house, has doubled.
It's gone up shockingly, and it is such a divergence from the historical trends. And, you know, you do have to ask yourself, why is this happening? I think it's probably true both in the homeownership arena and in the rental sector that the financialization of housing, the transformation of housing from being sort of a more simple project-based or home-based individual transaction to being a financial instrument, you know, whether it's securitization of mortgages or securitization of rental income, REITs, many of the other structures we've created, all of this has put pressures on housing that are just only upward in terms of the price. And this truly is a crisis. I don't want to use that. I don't like to use that term because people use it all the time about everything and what does it really mean. But we have far too many people who are foregoing other things they need in their life, you know, healthcare or education, sometimes even food, to be able to pay for their rent. And that's not sustainable as a society.
It isn't, but is the problem the financing and the way that modern financial tools have been used? Because that's also created more housing and it's leverage to improve the amount of money that's available. But there's also the issue of supply. There isn't enough supply. Is that what's driving it?
Well, I mean,
is this corporate greed, or is this simply we're not building enough?
All of these things are connected because you have to ask yourself if we're not building enough.
Mm-hmm.
And it's not fully clear that is the core problem we're having.
Which is,
you know, if you talk to affordable housing operators across the country, they will tell you they do have some vacancies. If you look around you here in DC, you will see at the, you know, luxury price point, we do have some vacancy.
Sure.
So,
but not at the affordable side.
We need more, but we need better. And we need to be able to invest in those properties to make them places people want to live and can safely live without putting their safety at stake. And we have to look at all of the other pressures now. We haven't talked about climate. It's hard to talk about housing these days without talking about climate, both for the threat that climate change poses to the actual properties themselves, as well as the effect it's had on the cost of insurance, which is another reason you don't get properties built. there are so many different intertwining factors. It's hard to throw, and you can't throw any one under the bus. It's just the perfect storm of a lot of different factors.
And no one's going to solve it.
There's not a silver bullet. What there are is a bunch of things that we can do in a slow and steady way. And we could be slightly faster and even more steady with more resources, which this country does have and could choose to spend on this particular problem that we're all facing together. But we do try here at HUD to do our best to make programs better, more useful, to produce more homes. On the single-family mortgage side, we were able to drop by more than a third the price of our mortgage insurance premium. That's helped more people be able to afford a home or even be able to qualify for it. On the rental side, we've been able to be creative with small new programs like the Federal Financing Bank Risk Share, that we were able to take a program that had expired prior to this administration being here, get it back online, and recently we were able to extend it indefinitely so that we can really build the infrastructure around it and get more participants in it and see more units produced as a result. There's lots of programs like that we can make some progress with.
Sure. So the two you mentioned, FFB and the reduction in the mortgage insurance premium, both feature prominently in the Trump administration's 2025 plan. And they say, eliminate them, just end it immediately. The pendulum keeps swinging back and forth, and you could just get, whiplash trying to keep up with it. What do we do about that? What happened to bipartisan housing solutions? And how do we find that ground again? Because when I read that document, I was like, okay, this is about all the things they want to repeal. And I get that. But what are we going to do that actually has legs that can withstand the back and forth that we're stuck in?
Well, the fact is there's quite a lot of legislation pending in Congress that is very bipartisan that has to do with increasing housing supply and affordability. On the rental side, there is legislation concerning the low-income housing tax credits, LIHTC. Mm-hmm. And on the single-family side, there's the Neighborhood Homes Investment Act. There are proposals to create new programs for first responders and teachers to get housing. There are proposals to try to expand factory-built housing and make that more of a viable and affordable solution. There are lots of bipartisan proposals in Congress right now that do underscore, for the most part, every member of Congress knows that their constituents are struggling with the cost and availability of housing. And why can't those things get over the finish line is maybe a question that's outside my lane.
Go ahead.
It would be, I come in every day to work and do my job. That's all I have to say on that. But I really hope that we see some of that legislation get all the way through. It's legislation that doesn't have much political content in it. It's not, nobody's ox is really gored. Mm-hmm. It's just making it possible for us to create more housing in a very difficult economic and interest rate environment.
And the LIHTC expansion passed the House overwhelmingly. Strong bipartisan support. Very few people voted against it. Languishing in the Senate. Who knows when it's going to come up. It can be pretty deflating.
What we do here at HUD is we just keep doing our job. And here in the Office of Housing, what I've felt most interested in doing is finding those programs that are wins for everybody. They're, wins for consumers looking for affordable housing or homeownership, wins for people either building homes or lending for the purpose of homeownership or rental, and wins for the mortgage insurance fund that we manage here at FHA. And we've found quite a lot of things we can do that have been helpful to all of those different interests. And part of how we've done that is we've really been out there. We've not been holed up inside the building. We've been out talking to people. We talk to consumer advocates. We talk to renters. We talk to tenant advocates. We talk to lenders. We talk to builders. We try to talk to everybody all the time. In fact, there are some folks who sometimes get on the phone with me now and they're like, well, I'm not sure I have anything else to say to you. We've said it all already. And so we've gotten a lot of great ideas that way and found a lot of common ground where we think we can move forward easily and have been able to improve a number of the programs that we already offer, as well as come up with new ideas. I mean, for example, using our 223F program on manufactured home communities is just taking an existing program and trying to use it in a slightly different way.
And what was 223F?
So what we do here at HUD is we pride ourselves at calling all of our programs by a statutory section number so that no one ever knows what we mean.
And you're doing an excellent job at that.
That is the best thing that we do. I actually, that was something I had hoped to maybe address while I was here, and I may have succeeded only in one tiny program in one place.
Which is
but
what?
It's
Which one did you fix?
I don't even know if I can say it yet because I'm not sure if we've rolled it out. But
okay.
we had something that we did that was named after a statute, and instead we just named it a name, so you might know what.
So what is
did.
223?
Well, it's just a financing program. In this case, that's being used for the purposes of allowing either mission-focused nonprofits or in some cases, manufactured home community residents themselves to be able to purchase or refinance a manufactured home community. And it's just a source of liquidity. It's a source of credit. And that kind of initiative or, product that isn't new but is sort of new is what we've tried to do. We've tried to take everything we can and do as much as we can using our administrative powers if there are things that we aren't seeing from Congress right now. I'll give you another example. This is also in the manufactured housing space, which is so important right now because it offers affordable housing, and today's manufactured homes are much more attractive, energy efficient, and appealing than in the past. We were able to take a loan product that we had offered in the past, which allows people to get a personal property loan to buy a manufactured home, which is how most people do buy manufactured homes. And we were able to change it so that it reflected today's market conditions and the prices of today's homes. There are other things that we do need Congress's help to change. For example, in the very same Title I, there is a property improvement loan that we can do, but it's capped right now at a very low number. And we would need Congress to lift that cap.
Because that cap is statutory.
But
none of the 203K program.
Well, in 203K, 203K doesn't have a cap, beyond regular FHA limits on what you can borrow. What it had, and to tell people what 203K is, because you're falling you're drinking the HUD Kool-Aid. This is a home mortgage renovation loan where you can borrow more than the existing value of your home if you want to do rehabilitation and repairs.
And this is an area where the Mortgage Bankers Association in particular have been particularly supportive of the work you've been doing and the recent changes you've made. So tell me a little bit about that.
Well, everybody knows how important it is right now to reinvest in aging housing stock. And having a home renovation loan for somebody who's buying a home is incredibly useful because otherwise you spend all your money on the mortgage. You get in there, you need to do whatever, $50,000, $100,000, $300,000 worth of work to keep that home modern and functional and comfortable.
And in some cases, to keep it from becoming blighted and vacant and abandoned.
Exactly. So in those cases, you can get a special kind of mortgage that gives you that cash to reinvest into your home. There are two flavors of that particular loan product. One is called a limited 203K, and that used to be for loans below $35,000, for which, right now there's very little you can do in your home for $35,000 or below. And then there's the standard 203K program, which is for amounts above that. Some people like to be able to access that limited program because it's easier to use for the homeowner. Mm-hmm. It doesn't have a bunch of the extra requirements with respect to documentation and draws and hiring consultants that the standard program has. So what we were able to do was to move that dividing line between the two programs from $35,000 to $75,000. Well, now that's enough money to do a lot of the things that people need to do when they first move into a home. Now, that's not going to solve your problem if you have to fix your foundation or, do some kind of gut rehab in order to make the home usable. Then you'll need to go to that standard 203K product.
And this gets into the whole issue that I've been so interested in and we've worked on over the years in a variety of different jobs. But there are homes that are too expensive. It's a huge part of the problem. There are also homes that are actually not expensive enough because there's that gap between the cost of the rehab and what it'll be worth after the rehab is done. And that's where Neighborhood Homes Investment Act comes in, which you had a really big part in helping develop and advocating for. And, I think there's a lot of hope that maybe in the next tax bill, there could be a place for that. Tell me about that and how it applies to some of the communities that you've worked in, both at HUD and at Neighborhood Stabilization Trust.
Well, thanks for that question. Thanks for the opportunity to answer that question. In many places, it does cost more to rehab a home than you're going to recapture when you sell that home. And the worst part about that is, of course, you don't necessarily know that in advance. And so the not knowing keeps a lot of investment out of the neighborhoods that could really benefit from that kind of rehabilitation. And what we've always heard people muse to themselves, if only we could use LIHTC for single family. Now, there have been a few instances of organizations using LIHTC to produce single family homes, but it's really a square peg in a round hole and doesn't really fit. So what a bunch of folks set out to do is to create a tax credit program that works for single family in those neighborhoods where we believe there's a viable homeownership market and where we believe people could afford to buy and would want to buy, but where the rehab isn't getting done because of this uncertainty about whether there's going to be that value gap at the end of the day. And what the Neighborhood Homes program does is it just fills that value gap with a tax credit. So sure, there's still other risk to investing in these projects. Maybe you'll build it and nobody will come, but that doesn't really happen these days. If you build it, mostly they come. And so we believe this could both have the effect of increasing the supply of affordable, sometimes starter homes, and at the same time have the great result of keeping neighborhoods from becoming disinvested and blighted. Mm-hmm. And so you're not only saving individual homes, but you're really keeping an entire neighborhood vital and ready for business, as it were.
And I think one of the reasons it has such strong bipartisan support is it makes sense in blue communities and red communities and urban communities and rural communities. And there are areas where this is a really huge need all over the country. And that's something that I think, when we think about the Department of Housing and Urban Development, doesn't always get as much attention. What's going on in rural America?
Bad. Speaking of what we call things here at HUD, there's what we call ourselves, because HUD goes so far beyond urban development now. Actually, if you look at our single-family mortgage program alone, in terms of percentage of our volume, we serve more rural homeowners than really any other channel. Like we are working in all of these communities. Our, CDBG, home, all of those grants, the new price grant that works for manufactured homes. These grants are used across such a variety of geographies. We really should probably be called at this point the Department of Housing and Community Development.
I like that. Maybe we'll just go to Congress and say, hey, we could certainly make that case, because I think we argued for the creation of HUD for 10 years, and with the home builders, maybe share both the credit and the blame for the name. So we'll take that under advisement. Racial homeownership gap, huge issue. NHC's been working hard on this, created the Black Homeownership Collaborative, working with NAACP, National Urban League, NAFA, industry leaders, but something you've been involved in your entire, I would say, pretty much your entire career. Huge backlash right now. Why should we care about this? And what are you guys doing in terms of your contribution to closing this gap, which is as bad now as it was in 1968, which is a pretty shocking statistic?
It is shocking. And it just speaks to how deep the forces are that govern residential segregation. And there are really two types of forces. There is the tendency of human beings to group themselves, and then there is outright discrimination. And in this case, there was racial discrimination that was not just engaged in by the federal government, but really cemented by the federal government in the early years of FHA, when we redlined certain neighborhoods and said we just won't lend in those neighborhoods.
And with great specificity and legal rigor. I mean, I think people don't realize until you actually read the reports that were written by the HOLC assessors, the kinds of things they were talking about, quote, Negro infiltration was a major threat. Redlining areas because of the fear that the people who live there would let people of color move in, even though they hadn't yet. I mean, it's shocking the extent and just vile nature of some of the language.
Well, truly everybody should familiarize themselves with what redlining was and what effects it's had. And its effects are still very, very much there today.
The scars of those lines are still there.
If you map any kind of resource, if you map the health of people in this country, if you map life expectancy, if you map incomes, if you map public safety, if you map access to different kinds of amenities, all of those maps will overlay on the old redlining maps. Yes, sure, here and there neighborhoods have gentrified or changed in some way, but for the most part, those maps cemented in a pattern of disinvestment that was not just about who lives where. It was about, where can banks or other lending institutions put their money? Where is the federal government putting its imprimatur that disadvantaged not just the individuals who were kept out of home ownership or kept out of neighborhoods in those days, but really permanently disadvantaged their families for generations to come. If you think about the middle class that was really built up by the GI Bill after the war, a very big part of that was access to homeownership. And that was limited to the white veterans who were returning. And in many cases, the assets and the wealth built in that home. I lived in a neighborhood that was built post-war where the homes they weren't even finished. People would come in and then kind of build them themselves to customize them. And when I think of all the families in that neighborhood and how much their homes appreciated, and then the different neighborhoods I saw them, the move-up neighborhoods I saw them go into, think of all the people who were excluded from being able to build wealth that way. And so that's still a problem today, even though that's something we did many, many decades ago.
I mean, my grandfather was a junk man, and my dad was the first person in his family to ever own a home. And he did it through the GI Bill. And there's a corporal who was black who he never got to meet because they weren't even allowed to serve together, never got that benefit. And that man's son or daughter didn't get the benefit I got as a multi-generational homeowner.
So today, coming into this job, I don't come into this building ever without thinking about that history of what the government's done. And it leads me to do two things. One is, of course, I try as hard as I can to make our program extremely useful for and accessible to people of color. I think this office has done a great job of that. If you look at our annual report, you'll see that by volume, our percentage of lending to first-time home buyers is, almost all of our loans go to first-time home buyers. And then if you look at our percentage of lending to people of color, it's so much bigger than any other channel that it's clear we're now offering a product that can help a lot of people get onto that first rung of the ladder of home ownership. But the other thing it makes me think about is, what decisions am I making today?
You talk about the need and the tools that are available to deal with the racial homeownership gap. Recently, the Supreme Court came down with a ruling basically wiping out this Chevron deference, which is a case from the 1980s that basically gave regulators and agencies pretty broad latitude to draft regulations and to interpret what the law meant, particularly where the law was vague. Now we're in a post-Chevron world. What does that mean for HUD? How are you looking at this? Because there's an open question about what your legal authority actually is now.
We still have the same statutes that we had. The question isn't about the legal authority per se. The question is, who's the decider, right? Are we the decider, or is the judiciary the decider? We are going to see how this plays out over time. But I want to say a couple of things in response to this question. One is, there were far more cases decided, particularly at the end of the term, that have an impact on us beyond just Chevron. So there's really a whole cluster of cases that are going to affect how executive agencies do their jobs. We're going to see that play out. We're going to see how it affects us. But the other thing I will say is that the people of this country now have certain expectations from their executive agencies. We need to continue to be able to deliver for them. Whoever the president is needs to deliver for the people, because if you don't deliver for the people start getting annoyed. And agencies are the way that we deliver for the people. So we will see how this develops. It is true that between 1984 and today, the world has changed tremendously. The complexity of so many issues that government deals with has increased exponentially. Even here, when we talk about the financial system, if you think about housing finance in 1984 versus now, it's a much different animal. And we need to make sure that these processes and institutions continue to function in the way they've been functioning, or people will notice. People like having a 30-year fixed rate, fully amortizing mortgage. We know they like that. We know that efforts to take that away have not been popular. We know that at the local level, people need the kind of affordability that HUD brings to the rental market. Without that, it's going to make it much harder for them to do their job, whatever party they come from. So I think we're going to see a very interesting process as these Supreme Court decisions work their way down and into the everyday ways in which regular people interact with their government. And we'll see how that goes. But it's going to continue to be important to administer the programs that we have to the best of our ability and to make sure we're providing those things that people rely on us for.
Well, and another one of these cases is Grants Pass, which involves community that said, we're going to fine you or jail you if you're homeless in our streets. And they had no other place for them to go. Lawsuit said this is cruel and unusual. Supreme Court said, no, it's not. Widely seen as criminalizing homelessness, but it's actually more complicated than that. In a post-Grants Pass world, what do you see in terms of how HUD is going to address this issue of homelessness and the fact that a lot of Democrat-run cities, as well as Republican-run cities, sometimes more, are interested in pursuing remedies in a post-Grants Pass world because it's having the rising homeless crisis is having a huge impact on their economies and their neighborhoods.
Right, but you'll remember that in recent years, people discovered we had a crisis of putting too many people in prison. It actually turns out to be extremely expensive to fund someone in prisons or jails. And it will be even more important then for the HUD programs that help house people and help people get off the street if that's where they are. Those programs will have even more of a positive net effect if you do a cost-benefit analysis, if the alternative is putting somebody in prison for $70,000 a year or whatever it is. I don't think on a long-term basis, localities will find that criminalizing homelessness is going to be a winning strategy for them. We could talk here about morality. We could talk here about the very foundations of this country and the rejection of debtors' prison. We could talk about all those things, but just on the dollars and cents, what really makes sense is to have affordable housing so that people are able to stay housed.
And that turns it right back around to the issue of supply, because we're actually pretty good at getting people out of homelessness. We really are not good at is keeping people from becoming homeless. And the reason is they don't have a place to live.
Well, we do know from, recent research that many of the people who today are unhoused, the reason isn't what you might surmise of whether it's mental illness or drug use. It is simply because they can't afford the rent. People living in their cars because they can't afford both a car and a house.
And going to work every day out of that car.
And going to work every day, sending their kids to school out of that car. So we know that affordable housing is a priority to avoid the issues that Grants Pass grew out of.
So one of the things I always ask my guests is to tell me the most interesting and important fact about you that has nothing to do with your work. And there's a problem here, which you have expressed, which is that you may think there isn't really anything interesting about yourself outside of your work, in part because you are so obsessed and focused on your work. I mean, I
frame it a lot differently.
We are, but you are a bona fide housing wonk and you live and breathe this stuff. But I know that there are some things that are very interesting about you because I know that. So I'm going to actually force you. You got to tell me something people just don't know about Julia Gordon that we should want to know.
I sort of feel actually like most people who want to know anything about Julia Gordon are like, okay, we've already heard that about Julia Gordon. But I'll say this about questions that ask me about life outside of work. I don't do this work because I got into housing because I thought it would make a good living for me, or, because my parents were in the business or anything like this. My life and my life's work have all been about trying to give people seats at the table who wouldn't otherwise have that representation. I have experienced many things that I've been lucky enough to be able to overcome, whether it's, my parents being evicted from a rental home, or, whether it's situations where I really did not have two dimes to rub together. And I've always said, whatever I do with my life, I want to make sure that people are represented if I'm ever to have access to any kind of, policy-making authority. And so that's what I try to bring to my work. But so all parts of my life brought me to the place where I wanted to do that. And I'll talk about a couple of things people may not know about me, since you've been very insistent on that. When I was in high school, I lived in a relatively small suburb, or really exurb, of Charlotte, North Carolina. There were, it was a very small place, the kind of one stoplight town that you just drive through and don't really notice necessarily if you're coming from one big city to another. There was, there's a grocery store, there's a drugstore, there was the roller rink, and then there were like 12 churches. I was Jewish. I went to church anyway because, to be honest, there was nothing else to do with my friends. They went to church, so I went to church. And for me, having grown up as a city girl in Philadelphia, having the experience of living in an almost rural area, very small town, the majority of the housing in town was manufactured housing, gave me a different perspective than I would have had if I had never moved from where I was originally born. And similarly, when I was in college, I started to volunteer with a program that provided assistance to people who were in prison. And so I had the opportunity to go into most of the prisons in Massachusetts and help people with random problems. This was before I was a lawyer. One time I helped a guy marry his girlfriend because they wanted to get married, for things having to do with their kids, and they couldn't manage to get it done. Or I would help with disciplinary hearings. And spending a lot of time inside correctional institutions similarly gave me a really different view of the world. And I'd say those two experiences helped me see how many different Americas there are out there, how important it was to understand as many of them as possible for whatever work you were going to do, and have, really spurred me to continue to be interested. I love the travel with this job, where I get to go to lots of different places and see what people are doing and what the neighborhoods look like. And all of it just reminds me of the incredible privilege I have to be in this position, and how important it is to always try to get out of my own head and thinking about whatever the little bureaucratic problems of the day are, and to just remember, why do we do what we do, and who is it that we're trying to help, and how can we learn from the lessons of the past?
And that's a great way to close. I really appreciate your time. I appreciate your commitment and everything you bring to this role. And, I wish you all the best and many more years of being able to make a difference here and everywhere.
Thank you so much for having me.
Thank you for listening to this edition of Beyond Four Walls. You can visit the National Housing Conference at nhc.org. There you can learn more about affordable housing policies, affordability challenges throughout the nation on our Paycheck to Paycheck database, and explore membership in NHC for you or your organization. We appreciate your interest and look forward to working with you in the future. Until next time, I'm David Dworkin, NHC's President and CEO, wishing you a great day.